Our next speaker is a good friend of mine, Naik. He's the CEO of TransUnion Africa. Lee was named one of LinkedIn's top voices in technology and is recognized as one of South Africa's leading digital and technology transformation experts. Lee's presently the CEO of TransUnion Africa. Prior to this, he spent the majority of his career at Accenture, where he led Accenture Digital. Lee's lockdown learning is having the time to reflect on his priorities in life. Haven't we all? The role of his family and their health and safety is his highest priority. Lee has also given a lot of thought to the difference he can make through the life he leads, to his family, his business as a business leader, and to his community. His topic today is the end of marketing world as we know it. Thank you, Lee, and welcome.
Thank you, Pepe. It's wonderful to be here today. So, my topic today is about the end of marketing. By the time I'm done, I may be banned from all marketing events that we're going to have generally in South Africa. But I thought it's worth having a conversation that's more controversial. For many topics today, we'll talk about brand, we'll talk about the experience, we'll talk about the customer. I want to talk about something else. I started my career in 1998. When I started, I became an android. For the organization I worked for, I was one of many, many thousands of people that went to an organization that was trained to think and work in a certain way. For 20 years, I behaved in a certain way. In fact, in the first 20 years of my career, I never actually changed my car, my bank, my insurance. Just recently, I changed my bank. I changed my telco. I changed my insurance. No one noticed. In fact, the bank that I banked with for the entire time still thinks that I bank with them. And they send me advertising that tells me, they don't really know who I am. In the world we are right now, in the world of COVID-19, when we think about accelerating to this new way of thinking, this new way of working, are we in fact knowing what's really going on? As an android, trained to think in a certain way, I went through a life where technology and data was what drove me. Now I'm in a world where I have to think less about the data or the technology or the marketing. The question is, what is the difference we want to make? Now, as the leader of a large business that works with information and data all day long, it's worth helping us add to the agenda today some data that will help us think about what's going on around us. We can't be naive that things are tough in South Africa. At the end of last year, we had an unemployment rate of 29.1%. We're forecasting as TransUnion that to go up to 38.2% at the end of this year. Our GDP is going to shrink by around 8% this year. 1 out of every 5 people have lost their jobs just in the last 3 months. What will we do in that time as marketers, as agencies? How do we think differently? If 20% of people have lost their jobs, if 80% of the consumers right now are struggling to pay their bills, how do you market and how do you target somebody that actually doesn't know how to behave in a world that they've never been in before? What if the world doesn't change? 38% of consumers in this time, they've actually been targeted by fraud. So we're telling them there's a race to digital, there's a race to the new normal. But in all that time, what we have found is that they're scared of this new normal. How do you become familiar with something you don't know? So when you think about all the challenges that consumers face, I'm worried. And as a person that looks after a large data bureau, we have data and insights on 25 million consumers. These are the same consumers that you're looking to target with our advertising and our agencies and our PR and our narrative. But can we see them? Do we know who they are? Are we just a number or are we just more than that? When we think about this new normal, for many years in my career, I've talked about digital being something that will become our new normal. So what has COVID-19 done? It's accelerated us to this new normal. This new normal is now my primary way of working. If you thought that omni-channel was something in the future, if you thought that the mobile device was just a part of your strategy, it is the only strategy, right? Let me give you some stats. The big 4 banks, what we saw in the last year was that 25% of spend increase on cards was actually done by the banks that weren't the top 4. The top 4 banks, one of the 4, in my view, is doing something with digital. But in the non-top 4 banks, they saw an average increase of 25%. What are they doing that the others aren't doing? we now talk about onboarding in the new world. We talk about this entire thing about how do you find a customer. We found that in the last year, 34% of all accounts opened came through what we call faceless onboarding. The customer didn't walk into a branch, didn't call your contact center. They were onboarded in a faceless manner. Even worse, we found that many of these large lenders that don't have digital onboarding capabilities were struggling. Those that do have digital onboarding capabilities, 86% of all accounts that were opened last year came through digital channels within these lenders. So if you aren't racing to digital, if you aren't thinking differently about working in this new way, where the customer has control, where the device is not just a channel to the customer, the device, the digital, it is first in everything you do. And the tech's going to change. We're talking about devices going from 2.2 devices per person to 2.9 on average by the end of 2021. We're talking about speeds increasing. 5G is coming. There is only digital. We need to realize that it'll always be digital first and physical second. In a world that's therefore phygital, that combines these two, how do you adjust your strategy when your normal ways of thinking and behaving will change fundamentally? Now, the market has shifted. It's very important to know that fundamentally, everything about how customers work and behave has changed. Now, we're all talking about owning a customer. Do you still own your customer? You may have owned it on the 26th of March, but do you own it today? One of the large big digital players has a campaign right now where they'll give you up to 100% back if you buy health food from one of the primary luxury brands in the country. They've effectively disintermediated the entire strategy, the marketing plan, all the propositions that the retailer had were a proposition that existed outside of that ecosystem. Who would think that would happen? And could that player claim the customer back? We don't think so. Over the last year, 45% of transactions that were done primarily by a bank have now been done by an intermediary, whether it's PayPal, Discovery, Takeouts, Uber, 45%. Now, with lockdown happening, we've seen a natural force of companies that couldn't physically exist via the existing channels. So if you can't exist via physical channels, your intermediary stepped up. Just last week, I bought a pair of Puma sneakers. I bought it from my house. It came to the house. It was the wrong size. I sent it back with a company called No One Cares. I care about the pair of sneakers that fit me, and I got exactly what I wanted in the end. We saw during lockdown that up to 24% of spend moved from retailers to the banks. And what is interesting, only a third of the spend that moved to the banks moved to the big four banks. The digital players are not just coming, they're here, and they're taking the lunch money off the table, off your existing players. This is what's scary. The bigger players are being disintermediated, and the intermediaries that have your customer, they're actually going to keep your customer. So while you're waiting for your customer at your front door, the door you designed with the intent of capturing the customer, your customer is long gone. Now, we've been talking a lot about ATL and talking about the 50 billion to up to 70 billion rand that gets spent every year. Pepe made a comment earlier and he asked, is it money being well spent? And if it's not being well spent, what do we do? Now, we do know that new account growth has been subdued in terms of the lockdown and people aren't doing as much as they should. Now, we know that it's difficult if I can't see your billboard, if I can't drive past your office building, upward your signage. What we do know is that you can drive hyper-segmentation to help you find these good customers. Now, of the 25.1 million people that have credit cards and have credit generally, these people are struggling. Over 2/3 of them are highly indebted. In fact, 73% of all disposable income every month goes towards servicing debt. Now, here we are looking for a gem of a customer group that's highly profitable, and we are going to struggle. What we found is that when you look at ATL campaigns, we actually monitored for the last 3 months. Just before coming into this presentation, I had my team actually cut up some of the data. So we had a look at key customer segments in all consumer-facing industries. Here's what we found. We found that in any typical campaign, 30% of accounts that were targeted fell out of the account profit requirements that the client that you're servicing intended having before the campaign, 30% fell out. 20% of the accounts that we signed up became delinquent, and 35% of these high trading consumers that you told your client were the ones you needed became dormant. So what you're telling me is that with all the money I spent, I only got a return on 15%. 85% was never good. So is ATL the way you're going to see me in this whole new world of digital? Can you find someone that makes sense for your customer? And will your customer not judge you differently? It won't just judge the creative or the execution or your testimonial and your track record. They're going to look for something else. When you look at this picture, do you see the Labrador behind the tablecloth? Is it there? Because I want to know for certain that it's there. So you have a couple options today. You've come to the fork in the road. As marketers, as agencies, as brand advocates, we're going to choose something differently. We're going to figure out, how do we really know somebody? Do you know that I'm a human? I'm just not just a number, right? Prior to the lockdown starting, we had on average about around 150,000 people that applied for payment restructuring. They'd go to a bank and say, I'm struggling to make my payments. At the end of May, there were 2.1 million people that went to a bank or a lender and said, I'm struggling. 2.1 million people that were distressed coming into the lockdown. Now, we have campaigns running as we speak. How many of us are targeting campaigns at people that the second lockdown ends become bad customers that are struggling into default? So we're going to see this need to know somebody better. We have to find a way to hyper-personalize to Lee's needs, to our Pepe's needs. What we found was that if you couldn't hyper-personalize in a world that's now completely digital, our irrelevance as marketers, as advertising, will clearly be seen. We've got to find a way to do this better. So what else do I want you to think about? Think about outcomes that matter. As a CEO of a large company in Africa, we have been cutting budgets all day long. We have to do that for relevance. We've seen in most of the clients we serve 5,000 clients in South Africa. Most of them have cut their budgets by as much as 50% towards marketing. So now you have 50% less. What do you do with that? In the last year, TransUnion, the team I run, we actually did a couple experiments. Could we find a way to help solve the problems that our customers have? What are their problems? Driving revenue, driving profitability? Do they care how it's done? Not really. They're looking for more volume and growth as the disruptors come on board. In the last year, for one of our big customers, we are able to increase their account onboarding by 60% at 1/10 the cost of a typical ATL campaign. When we actually fine-tuned this entire BTL campaign and linked it to the cost of acquisition, we found that we were able to reduce the cost of acquisition by 45%. Without being an agency, without being a creative. So in the world that we are right now, how do we think differently? How did TransUnion, a non-agency, non-marketing firm, do that? What do we have to do? We need to embrace the data nerd. We've been thinking about marketing top-down. Like we had heard earlier today, we go through a trajectory, a stage process of coming up with our propositions. A lot of it's linked to the creative. A lot of it's linked to how we think about what an end customer wants. We do psychographic research, but we need to embrace the nerd, the scientist, the actuary. We've got to understand what vintage curves are. We've got to understand what buckets people are in. We need to figure out that customers are all powerful and we need to know who they are. And the data is all around us. Everyone's got data, but are we using it to answer the right question? That's where we find these data scientists are coming together. So in a world that we say is a sharing economy, are you taking the best of who you are as an agency, as a marketer, as a business that embraces marketing and combining with the best insights? Because in this world of relevance, you have to find a better way to do that. And then finally, I want to talk about this concept called omni-choice. We've all spoken about omni-channel for as long as we wanted to. Here's the truth. We've gotten to the point where you can't force the consumer to engage or transact in a predetermined journey that you set up. You thought you could do it. You can't do it. As a customer, as your customers of your business, you can't actually do that. we found over the last year that only 30% of our counter product activations were concluded in the initial engagement channel that you set up with your consumer. 70% didn't happen in the primary channel. Even worse, 45% of consumers that did switch channels in your omni-channel experience actually dropped off because of a variance in experience, the offers, and the service that you had. Now, that is a real concern for us. I was having a chat to my friend Dee Chetty the other day, and he was saying, Lee, we've gotten something wrong. We as marketers have been fighting to own the customer. In a world that's disintermediated, in a world where there's sharing economy players that own different stages of the value chain, we shouldn't care to own the customer. Every effort we put in as marketers should find a way for our customers to consume our product or our service. It's going to be more a service than a product in future. We're going to find a way to do that better. So when you think about our relevance, think about the outcomes that we need to deliver, and think about a way to focus on what matters, not just to your relevance, but to the relevance of the business and the customers you serve and the broader economy. Thank you very much, Pepe. Appreciate it.